Hello, it's Cryptolyze. I hope you are well this Saturday, 13 January 2024. We'll meet again today for our weekly. We're going to look back a little on this crazy week. We will mainly do pure technical analysis on macro on BTC to plan ahead. On the real impact of ETFs, what really happened, and you will see that there are still quite a few things to see. We will start right away with the very important S&P 500, in which we had a week where we went to retest the top of the previous year. Very interesting, in which we marked a new top for this year. So here we still have a market which is rather bullish on the S&P 500 on the Nasdaq. Also a little less on the Nasdaq. And that's still interesting. To see that the Nasdaq is underweighted compared to the S&P 500, when historically we should be driven by the narrative of artificial intelligence, and therefore have an overweighting of the Nasdaq compared to that. For me, these are warnings that have been in my head for some time now about the overexposure of the stock market in relation to what is happening at the level of the Fed, and at the level of the various indicators, and in particular the VIX here M calls out. The VIX being the volatility options, finally on the volatility of the S&P 500, which is in fact the consideration of the volatility index of the S&P 500. The lower it is, the more the market considers that there is no risk in being on the S&P 500. So this implies that it is an option which is supposed to be a hedge. The lower the price, the fewer people who are interested in this option. So the fewer people there are who think that there is a risk on the S&P 500 and therefore on the American economy. And it's very interesting when we start to look a little bit at the narrative that is playing out on macroeconomics, because we are on a narrative that is around, when I take the image that Xavier shared Finot on the interest rates at the end of the year, therefore implying what the market is pricing at the end of the year, we see that we would arrive at rates of 3.5, 3.75. That implies that we would pass here. So here we have our rates from 5.5 to 3.5 approximately. Okay? So here we would have this fall, which would go that far. That in 12 months. I really believe that there will be a big acceleration over this period, and the market is pricing in the fact that we will come back down at roughly the same speed. And it's still impressive when we look at the volume of people. It implies that we are at 40, and even those who are even lower. So 18, so basically 20, we are there at over of 60 of the market, who consider that we will be below 375 at the end of the year. This also implies that the American market and the Fed will interact on the market. Is it going to be rather positive? Is it going to be because inflation, which is represented by this curve here that we see there, will continue to arrive in the 2? We are still far away. I'm just going to align the rates because it's going to be simpler to be able to have good visibility, even if it's not exact. The 2s are located here. You have to understand that the 2s are still relatively far away. There is still a fall of 1.4 in terms of inflation, namely that in terms of oil and energy in general, we see that we have stabilized. We see that we have made up for the loss, and finally the acceleration, also that we had on 2022, 2023, so we have stabilized at the level petrol. The analysis that I regularly give you shows that we are in a form of range where it can oscillate, yes, but overall, we will no longer have hyperinflation unless we have a really strong crisis of amplification in the Middle East, but we are very, very far away for the moment. So for me, we are really in a level which is more critical, which has a technical level in which we are in the process of retesting here the previous tops. And there, we clearly see that at the level of this inflation, we have something which does not continue this downward inclination. So that means that in terms of the Fed's job, which is one of its missions, it is to bring inflation back to 2. Is she currently at 2? No. Is the bearish continuity going towards the 2? No. So there is no indication that through inflation the Fed will decrease drastically. If we were at 2, yes, there would certainly be a desire to go down drastically. The Fed's speeches, and what is rather logical at the same time, is to say to myself I'm going to keep the rates as high as possible until I am sure and certain that inflation is being fought to avoid the mistakes of the past, which are to lower rates too quickly and subsequently return to hyperinflation, which exceeds previous peaks. And that's why we're going to hold rates, I think, for a while yet. And this is where I ask myself the question of what pricing is being carried out at the market level. What is this pricing that would cause the Fed to lower its rates? For me, it is not linked to inflation, but on the other hand, it could be linked to a much stronger economic crisis, and in fact an impact on this drastic rate increase that there may have been and precisely a reaction from the Fed in relation to that. There are several elements that actually feed me in relation to this. The first will be here, this inversion of the rate curves. I presented it to you for a long time. You know, if you follow the channel, a little bit of the idea that I have in relation to that, which has been proven historically in relation to all the moments where we have gone below, it is we have the beginning of a recession. At the moment when we go back above the zero curve, we seize that we are starting to re-accelerate and restructure on this curve of zero. So for me, we could have the start of a recession here. In any case, historically, when we went back to zero, we always had a recession at the time of the zero crossing. In any case, an announcement of the recession, although the recession was generally structurally effective before. But then, we have this first alert, the reset to zero. Okay. Indeed, if we start to have a recession, it is very likely to have a drop in rates and an overreaction of the market compared to that. And so when we also look at our statistic, which is the unemployment rate, we see that we have an increase which is subsidiary, but it holds up rather well. Clearly, it holds up rather well compared to the drastic increase in rates that we have had and to the generic name, but that does not prevent us from still remaining relatively high. At the level of the 3, we are above the 3-4. Ideally, we would have liked to remain in the low basket that we had maintained for a certain time at the level of this hyperinflation and this fall in inflation. There, we are starting to see something which could be symptomatic and which will be looked at the level of the Fed. It will be the comparison of my unemployment rate versus my inflation. What capacity do I have to inflect this inflation in relation to this unemployment rate? The unemployment rate is the representation of the American economy, of full employment in the American economy, and it is a statistic that is highly watched by the Fed. So it's going to be the inflection of both. If we start to have an increase here in the unemployment rate, and behind that, an increase in inflation, or a stabilization of inflation there, we will potentially have the onset of a crisis, and we will have to be very careful. And this is where we could have an overreaction from the Fed with precisely a drastic reduction in rates to overreact. The other important point will be the general state of the market. Currently, we have Fed rates which are overcompensating compared to inflation. This means that when I expose myself to the Fed, to the American Treasury bond, I have a positive return when I subtract inflation. So that means I can get returns without taking any risks. And that also means that we have a lot of capital in American Treasury bonds. What will happen when we arrive at a notion of risk in which we will have a drop in effective rates? We will potentially have a sequence of capital on the dollar, well, in any case, outside the dollar and outside the good to the American Treasury. And we know very well that we currently have a problem at the level of the Treasury bond on those which predate the upward acceleration that we have experienced. On this upward acceleration, we are going to resume the American Treasury rates. We are going to resume those at 10 years. It is more telling that during all this upward acceleration, it was much more interesting to hold American Treasury bonds, which brought back more than 3.5. So obviously all the Treasury bonds which had expired, 20 years, 10 years, 15 years, and which were in the vicinity of 1.2. Well, that is not necessarily of interest. So many have sold, in fact, or at least still hold these bonds, but which are at a discount compared to their real value. And we know very well that regional American banks, a certain number of them, have not taken out insurance in the event of a rate increase, and therefore that means that they are short if they are ever forced to sell them. The obligation to sell these bonds can happen in two ways, namely the establishment of a bank run, with behind the reduction of the protection of the Fed. We recall when there was SVB and the financial crisis last year, the Fed intervened, not by injecting liquidity, at least officially, but unofficially. They made loans to different banks to be able to keep up, made their assets, which were in negative. Implied, we lend you the equivalent of these vouchers to treasures which are odds at their classic value. So you can borrow from us. You give us the vouchers in return. And when the end of the loan will arrive at that moment, directly, we will make the exchange. You will repay in the current state. And so that means that we are going to have a liquidity crisis that is going to happen. This liquidity crisis will arrive when, normally, we will arrive at 1 year determined in relation to what happened at the level of the financial crisis and at SVB. And that should and must happen normally in the coming months. And that's going to be really important because that's going to be the next problem that we're going to address. Clearly, for me, I think that we will have a return of the Fed's action through an injection of liquidity, which will take various forms. We do not know if it will be this loan. It does not matter. But in any case, the market will prepare. or in any case will try to price in the possibility of a shock, once again, on regional American banks. So there we could have an impact which could also be relatively strong, which could lead to these falls at the level of the targets. That means that we could find ourselves on an S&P 500, which will retest important levels below 4,300, below 4,600, which are the targets that I have for the coming months for the year 2024, on which I do not in fact see the triggering of an upward acceleration without having a classic retracement on the traditional market, and namely, that for me we are going to have a bubble around artificial intelligence, but above all we have economic and financial instability in the USA, plus political instability, which will arrive with the American elections in 2024. So we are going to have opportunities, strong opportunities in 2024 that we will have to monitor. Concerning BTC, clearly this week, and we will say the previous months, we were really on a narrative around spot BTC ETFs. That's it. It was validated on the 10 launched. On sale the 11 and the 12, we started to have volume, which arrived. I covered that in the dailies. And we had the start of sell the news set up. The big question we're going to have to ask ourselves is this really the sell the news? And behind that, how far are we going to go? Clearly, how far back are we going to trace? And that's why we're going to take a step back. Already, initially, we can clearly see the upward acceleration that we had during this entire period, which was from October onwards, in which we had the fake news, and which in fact gave the impetus necessary to break the range in which we had been for 250 days to have precisely this bullish acceleration with the establishment of a lateralization, and then the launch with a volatility reaction on the launch. So we still have a movement which was built and started by a notion of fake news, and which was built around this narrative on BTC, which grew behind the construction of communication around ETFs. In fact, we had speeches, we had a lot of people from elsewhere who spoke. We're going to talk about BlackRock later. We also had a lot of internal communications around the world. Crypto on BTC and on the valuation on the inflow that there was going to be, so it was the arrival of institutional capital directly through spot ETFs, and therefore obviously we had expectations which were very high, and many people returned to BTC and cryptos while they had left during this entire phase here of preparation upstream with the fall of Terra Luna, with the period of ranging sweet, and the bullish reaction that we had with the question of 25,000. But many people returned during this period. And the question we will have to ask ourselves is, okay, but clearly is this a sell the news? When we look at the short term, what is interesting to see is that we really have the opening of the American market, in which we have had the opening here of trading around the different ETFs. What is it? What do we see? We see that there is a massive profit-taking, lateralization, second profit-taking, lateralization. And if we look, there it is closed because I am on the CME, therefore the Chicago Mercantile Exchange, which is the future of institutional investors, which closes on Friday evening. And if I look at the total index, we see that we have made another new wick, bearish, in which we almost touched 41,000. We were at 41,500. So we went here from a top to 49,000 to 41,000 all over 2 days from the moment the ETFs have been validated. The question we will have to ask ourselves is, where did this sale come from? Where did this bearish acceleration come from? What is interesting to see is that clearly the volume that was at the ETF level is not sufficient to validate the thesis that it is a sale at the level of the different ETFs, so there was not too much short selling in any case to cause this market creation. So there we still have symptoms, here classic, of buy the rumor, in which we have an acceleration and an establishment of psychological structural FOMO at the level of bullish acceleration on the fact that we are waiting for this news. That this is the news that will change everything, that will transform everything, and that it is news that will change overnight. Very important. It is something that we have heard and read very, very often, so it's classic. Of the construction of a rumor, and then we set up in sell the news. The news has arrived. What is expected is not happening. So that means that we have behind a frustration that is happening, and we have the whole psychological aspect which is put in place with capitulations behind it, which will arrive on those who bought the top, those who bought the news, really the top of the news, and behind those who bought during this entire rise thinking that it is the arrival of the bull run. The question is not to say is it a bull run or not. That doesn't really matter. The idea is to say, okay, here already we don't have the expected reaction from the market with potentially a top at 60, 70, etc. And the advent of the bull run, because at the same time we have to understand that we have a macro which is relatively complicated. So that means that if institutional investors want to expose themselves to BTC, we must understand that they will expose themselves on an asset that is risky. So yes, we currently have BlackRock, which is positioning itself with words which are very interesting because they do not consider, the CEO of BlackRock does not consider BTC as being a currency, but really as a asset class, which will be interesting. He also talks about the Ethereum spot ETF, but we will come back to that later. But in this case, we find ourselves here in a decorrelation between the expected and reality. Yes, there was an injection of volume, but we do not have a massive injection of capital because at the same time, technically, we have to understand that it will happen over time. It is a door that is open. But this is not something where there were billions and billions who were waiting for this to inject themselves. There were other ways to gain exposure to BTC, structurally, through mining, through micro strategies, through funds which are in Europe, which have already existed for a long time, through the future. There were lots of ways to expose yourself in this way. And it was just an announcement effect, but one that is quite effective. But how far can we go? Here already what is interesting to see is that we have not broken any significant lows. Technically, we have maintained this low 2 here, which is really very important. When we look at these lows which had liquidated all the longs here, and which had in fact made a clear place, but we see that we have a little bit of liquidity which is below, and that for me is a first batch, which is really important. Either we blow it up and therefore we recover the liquidity, there we have a first bearish intention, but we maintain the 40,000. The 40,000 are very important because for me here we have a strengthening of liquidity with these 3 candles which have been carried out. A strengthening candle, a liquidity take, and a strengthening candle. And there we actually have the bottom of the channel. We must understand that we have just made a reintegration into the channel here. We have here first liquidity intake, second liquidity take, third liquidity take. We can see it clearly by this candle here. So we had these 3 liquidity holds before having the bearish breakout and the reintegration. But have we broken any lows? So yes, here structurally we broke a low which corresponds to the top of this range, and which is rather logical because we are in a reintegration phase, but the liquidity which is at the bottom of this low has not been taken. The liquidity at the bottom of this low was taken. For me, the real signal of a big sell, the news would here be the breakout of the 40,000, exactly the breakout of the 40,500. On that if we break and we reintegrate below and we consolidate, there, on the other hand, we have a signal to look lower and to clearly look for the 32,000, which is the break of the previous range. And therefore, we will work like that, in fact, on these forms of level. For me, there is no signal to go lower as long as the 40,500 holds. For me, we are no longer in a form of range reintegration, in a form of lateralization, waiting either for a new event or a new effective rumor. And as long as we stay and hold in this range, it's a period of accumulation that can be interesting. We just have to take into consideration that we have other elements which are mainly on the CME. That's why we are going to switch. We're going to go back to that. We have the CME gap, which is present at 40,000 with a small wick to fill that. So nothing prevents us from seeking liquidity below the range as we did above the range. Put away and go back, get back into the range, okay? So we have already experienced this for 250 days here. Why wouldn't we have the same thing there while waiting for the implementation of the halving and potentially the good days of 2024 to prepare for this upward acceleration of the bull run at the end? 2024? That would be completely consistent. On the other hand, if we break the 40,000, that implies that, and that we consolidate below. So something that is done like that, that implies that we are going to absorb all that, because that is just a creek. So it has no resistance, very little liquidity. So we just created liquidity to push, but it has no strong resistance. The next big support is going to be here 32,500, with the breakup that was achieved thanks to what? Well, the BTC spot ETF. So there, we really have this rumor which gave rise to the movement, so it would be logical to go and retest the breakdown of this rumor. And for me, the buying zone is the bottom of the range. With up to at 32,000, it is a zone in which I will reload. I will not necessarily reload on BTC, but I will perhaps reload on alts, in which we will have bearish pressure if we break the 40,000, and therefore opportunities to reloading at this time. I'm not saying that it will necessarily happen. I'm just saying that if it happens, this is the plan I will have here. And it's the same. I'm going to keep liquidity in this area, as I defined it for you. I'm also going to keep liquidity if we ever return here, and the same if we ever go lower and return to the 20,000 with a crisis that would be much stronger. If we return to the 20,000, that implies that we have a U.S. economic crisis, which is really drastic, and behind which we will have a fuse, which will go looking. We will have to react very quickly because I think we will not stay there for long, so we just have to be prepared for eventualities. I am not saying that we are going to go down to 20-0. I am not saying that we are going to break on the rise. I'm just saying that it's different in scenario. You just have to be prepared to have your strategy for each scenario. What is interesting to see is that if we look a little at IBIT, which is the token of iShare Bit Contrast, therefore, which is the token of the representation of the BTC ETF from BlackRock. We see that the launch we had a lot of upward volatility, but above all a big effective drop. Well, here, I'm doing it on purpose by putting it in weekly. If we put it in an hour, we see that we still have something that is a little more structured. First drop, structuring, opening of the market. Second drop, structuring. We stop the quotation. Are we going to look underneath? There, it's going to be really interesting to see the market open on Monday. On this, we will potentially have a reaction which will be quite strong. But it is true that the more we have positive news, and that we are in fact being shown a form of effective FOMO on mainstream media, we have to be careful and ask ourselves questions. At this point, am I not overexposed? And at some point, I will have a retracement. Am I ready for this ability to reinvest if we ever have a retracement? And that's very important. And there, potentially we have another narrative which is in the process of positioning itself on the ETF. Are we not doing the same thing on ETF with capital rotation? At the ETF level, when we look at the reaction here that we had at the monthly on Ethereum/BTC, therefore which is the representation of the strength of Ethereum in relation to Bitcoin, we see that potentially here we have the work, a rotation of liquidity, which will be effective on Ethereum. So here we will have to monitor. For me, it is not enough. We would really have to break the 0.62 here to say that potentially we are going to retest a part superior, because there clearly we have set up a range where some say a double top to see in all cases for me really the effective target here, where we will ask ourselves the question, are we in a double top or not, will be the 0.70, where here we will potentially have either the establishment of a distribution or a reaccumulation with a bullish breakout, and something which will go very strong to the upside. In all cases, the BTC dominance here breaks. So here we have gone below the zone that I gave you. So it is for me here. This implies that we are going to have dilution. We are going to break here the 50.91 to potentially retest here the 50 and the 49. So that means that we have a liquidity leak from BTC towards either USDT or all altcoins. And when we look at a small little altcoins, we have some outperformance, but we still have a lot of maintenance compared to BTC, or even underperformance compared to BTC. As a reminder, each line represents an altcoin. We still have a large banner which is in the lower part, so BTC is located here, below with behind it a certain number which are really underperformance, and very few which are on performance, which are rather narratives which are played. And we are going to say certain tokens in which we have a community which is very strong. We will of course note our friend Tia, who took advantage of this fall in BTC to push it up without any problem. It's interesting to see that we really have overperformance of certain narratives and certain communities at the market level. In terms of order flow, for me, there are several important targets to see. This is because we have no increase in open interest. So we have no investment. We even have a decrease in open interest. We can clearly see this overall. Of the open interest on the entire contract, we can clearly see that we have a retest which is effective, and a retest which corresponds to 38,000, which is in fact the breakout zone, before in fact we have the bullish creek here of which I spoke to you earlier. The bullish break with the implementation of the landing, and we are gradually returning towards open interest levels which correspond to these levels. So for me, this is a level that will be worth monitoring, especially as we see that the funding rate has stopped, okay? So that means that people are much less exposed. We have a lot of liquidation currently, so we are in the process of structuring the market. And this is where we will just have to be patient. We arrive in January 2024. We had big news. I think we are going to arrive in a phase of lateralization. Are we going to have another bearish acceleration? To arrive in the 40,000 zone? Potentially, and on that we will start again for a few weeks on a lateralization before having a trend which will be given and which will prepare the halving and behind the continuation at the level of 2024. This year, 2024, is going to be excessively important. Therefore, you have to be prepared for all eventualities. That's why I have provided you with a free 100 guide in which you have 30 concise pages to know when to buy, when to sell, at what moment, what strategy to adopt. I give you all the elements it is in description and in free 100 comment. And I hope you liked this video. If so, don't forget to leave me a like and a comment, and we'll see you tomorrow for a new video.